Good evening, this is Dwayne from CFRN. Today is Sunday, August the 19th, 2012. It is 5:36 p.m. Pacific time. I'm going to make a video. I won't tell you it's going to be quick, although I would love for it to be quick. But if you've watched any of my videos, you know they usually aren't quick. I will try to get to the point early on so that if you don't want to watch the entire thing, you'll get the idea. What I'm showing you here is a chart of the S&P 500 E-mini futures, and the question simply is, what if trading could be simple? What if? If you've been around any time at all, you're pretty much convinced that that's not possible, that it can't be simple. If it were simple, then everyone would just do it and everyone would have a lot of money, and or the markets would simply go away. Okay, fair enough. I'm going to walk you through some trade setups using one of the indicators from our CFRN indicator set. There's a total, I think, of 8, and we do use several at a time when we're in the live E-mini trading room each day. When you take the free trial, you get 2 hours in the live markets for 5 consecutive days. Alright, there we go. There's the address. CFRN.net apply. See, how do we blow that up? There we go. Properties. Let's go 24. That's huge. CFRN.net apply. Okay. The indicator on the screen is the CFMA1. That is the backbone of the CFRN indicator set. I'm sorry we don't have a more zingy kind of a name for it. It's kind of generic. We wrestled over a few things, and a couple years ago we finally just gave up and said we'll call it the CFMA1. And people go, oh, CFMA1, I get it. What moving average is that? Well, it's not. It's a compilation of a whole lot of math. Okay, there's a lot of mathematical heavy lifting going on. But the basic concept of the indicator is this. If the MA1 is red, we anticipate lower prices. If the MA1 is blue, we anticipate higher prices. Red, lower prices. Blue, higher prices. Okay, let me layer one more thing on that. When price gets on the south side of the MA1, that's sort of our heads up that it will probably change to red. When price gets on the north side of the CFMA1, then we have a heads up that it's probably going to turn blue. Okay? Now, a lot of times people go, well, before I take your free trial, I want to know how much it costs. Well, it doesn't. It's free. That's why we call it a free trial. They go, no. I want to know when I'm done with the free trial. I want to know how much it costs then. And you know what my question is for them? I go, why? They go, well, because I want to know when I'm done with the free trial how much it's going to cost me. Okay. But the purpose of the free trial is for you to determine if our indicator set has any value for you. So if I told you it was $10,000, you might say that is a lot. If I told you it was $100, you might say that's very cheap. If I said it was $10,000, you might go, wow, that must have a lot of value. Or if I told you it was $100, you might say, well, that can't have any value. No matter how you say it, those statements are all erroneous, false, and full of holes. Unfortunately, when people go looking for a Emini futures trading course or a Emini indicator set, and really what you need is the two, because what you need more than anything is to learn how to trade. Okay. One thing I will say is our course runs 90 days. I will say that once you become a CFRN partner, you own our indicator set for life. Okay. So as long as you're going to be a trader, you got it. Okay. So back to how much does it cost? The reason you don't see the price splashed all across our website, and I even went through some images last night and some other sites and looked at, the price is right, guaranteed lowest price, best price yet, tremendous savings, huge value. Okay, that's one person's interpretation, and that one person happens to be the person that's trying to sell you the course or the indicator set. They're telling you that at this price it's a great value. But how do you know that? You have to act on blind faith. We do something that is unique and different. I don't know of anyone else in the industry that does this. If you have an interest in learning to trade, if you have an interest in our course and in becoming a partner and owning our set of indicators, then what we do is we ask you to use the indicators for 1 week. We ask you to join us in the live trading room for 1 week. We don't want you to simply watch our screens and watch us put on and take off trades. We want you to do that 2 hours a day for 5 days. But because we have a global marketplace, we want you to spend the other 22 hours of the day using the charts, watching the live data flow, and actually using the indicators and the simulator to put on and take off trades. Because this way, at the end of a week, you'll have a pretty good idea what this course is worth. Now, a lot of people who are smart, they go, well, if they don't put the price up there, it must be a lot. Okay, I understand that thinking. But let me tell you, this course and this indicator set, whether it ultimately has value for you or not, will depend largely on you. Some people don't want that responsibility. Our course and indicator set is less than 1/3 of many of the popular Emini trading courses and indicator sets out there. It's a one-time charge, and again, it's less than 1/3 of what many vendors charge. So why am I hesitating to tell you the price? Why don't I just go ahead and spit it out, and then you can click on to the next video on some other site? Because I'm challenging you. I'm saying, hey, if you really want to learn how to trade, why don't you go find somebody who will let you use their indicators for a full week? Why don't you go find somebody who will teach you how to use their indicators for an entire week and actually let you use them? And then when you find the one that kind of hits home, makes sense, and works for you, I'm going to suggest that you buy that one no matter what the cost. Because if you buy it and you put it on the shelf, so to speak, and never use it, it has zero value. It doesn't matter if you paid $100 or $100,000, right? And so that's part of why we kind of put you through the boot camp, if you will, of the free trial. We want to see you download the platform. We want to see you install the indicators. Because if you aren't willing to invest some time, however much money you end up investing in somebody's indicators and somebody's course, it's going to be a complete waste of money. So see, whether you become a CFRN partner or not, we're trying to save you money. Okay? So first we ask for an investment of time. Before the week's up, you'll know everything you get, you'll know what it costs, and one last time, it's less than a third of what many popular courses and indicator sets sell for. Do we think it's the best? Well, considering that we have taken most of those courses and own most of those indicators and have built and created this curriculum and this indicator set ourselves, then I'm going to say, in our opinion, yeah. This is with our combined 10 plus years of experience in the business, closer to 20 probably. If I bring in everybody under the roof, the number grows exponentially. But you need to take the free trial. And if you're not willing to take the free trial, it doesn't matter how much it costs, because that should be your first investment. You've already invested 11 minutes listening to me rattle on. So why don't I just go through and show you some trade setups on using just one indicator. Okay, no confirming tools, no ancient trading secrets, just some kind of simple point and click. Okay, now keep in mind there's a lot of heavy mathematical lifting going on in the background. Okay, all right. Now I rolled my charts back as far as they would go without loading more data, and they rolled me back to July the 25th. Today is August the 19th, so this is not like I'm curve fitting data. You have to be careful of that. People do curve fit data. What does that mean? It means they go and wait to find a day where price just so happens to line up perfectly with their indicators. They take a lot of pictures, make a lot of videos, and that becomes their sales pitch for the next N number of days, weeks, or months until the stars align again, and then they take some more pictures and make some more videos, and that becomes their sales pitch layered on top of the other sales pitch. You see what I'm saying? So I'm just going to show you like a month's worth of data. Globally, around the clock, we have partners around the globe. We have partners in places that I have difficulty pronouncing. So we're not all trading Wall Street hours. We're not all trading the S&P 500 E-mini futures, which is a good thing because our methodology and our indicator set performs well across multiple markets and multiple time frames. You want to trade corn? Okay. Soybeans? Not a problem. Currency futures? Okay. The yen? We got it. We cover it. Okay, let's get a move on. All right, we're looking for price to break below the CFMA 1, and then we are looking for price to pull back to the MA 1. Okay, now if you look right here on my screen, that price is 1334.58. You can't sell 1334.58. You have to round that down to 1334.50. We trade market if touched, MIT. The high of this candle is 1334.50. So the order would have filled to go short at 1334.50. Price ultimately dropped to a low of 1331 1/4. $13.31 1/4. And what I said the price up here was 1334.50. All right, let's do some fast math. 1334.50 minus 1331 1/4 is 3.25. So this move down was good for 3¼ points. 1 point in the S&P 500 E-mini futures is worth $50. And so that moves stem to stern, one contract, 162.50. I'm not going to break every trade down like this. I just want to give you some kind of a baseline to make your own. You can do your own calculations. You can, as I go through this thing, you can look at trades. You can hit pause on the video. You can then go over to the calculator, and you can figure out the prices yourself. Okay? All right. So one contract, 162.50. Simple math. If you're trading 10 contracts, $1,600. The next trade setup, price gets on the north side of the CFMA 1. See, it does it on this candle right here. It then pulls back, and we are looking to enter on the pullback. Okay? Now, this is important. There has to be some of this empty space. I'll show you some examples here in a minute where you'll see why that's important. Now, let's go draw our line right here. 1332.75, but that's not. That's 1333. The low of this candle was 1333. So that's where we would enter. Now the beauty of this is you know way ahead of time where you're going to be entering. Also, because we are not scrolled all the way to the right edge of our chart. I mean, today's August 19th and we're looking at July 25th. When we get to the end, you'll see that over here, the price that you enter at, it's colored. So you always know exactly to the tick where your entry price is. It's never a question. Well, you know, no, none of that. None of that. You know exactly when to enter the trade and at what price. Okay? On this trade, we know that the exact entry was 1333 and the swing high was 1335. The next valid entry was right there. At 1333.75. Price dropped down to 1332.25. There's the entry. It's market if touched. Price drops from the high of this candle. It's 1334. The low of this candle is 1332.25. Okay. All right. The next valid entry will be to go long. Right here. That price is 1333.92. You have to round that up to 1334 because you can't buy 0.92. So there's the entry at 34. and it runs up to a high of 36 1/4. Okay. The next valid entry, and oh, by the way, I'm only going to go over the first trade entry in each direction. Are there ways that you can take multiple entries in the same direction? There are. I'm going to keep it simple and cover just one. So there's the entry to go long. The next valid entry to go short comes right here. Well, actually, we need a little space. So let me back this up. Oh boy, now I lost track of where I was. Oh, it loaded more data on me. Okay, the first pullback on the south side right here, okay, is 1333.75. Price drops to 27.75. 33.75 down to 27.75. That's about 6 points. Yes? 5 points. No? 6 points. That's a 6-point move. Alright, let's keep going. The first pullback entry would be right here, going long. Now that price is going to be 13.49 1/4. Price goes up to 57. Let me say it again. The entry was at 49 1/4. And price ran up to 57. That's about another 7-point move. Okay, right here, 13.51 and 11. We have to round that down to 13.51. The high of this candle is 13.50.50. So it never pulled back over here far enough to trigger us in. But it did right here. Now let me say this. I haven't mentioned this yet. We never risk more than 2 points. Not with this trade and not with this trade setup. So what does that mean if we attempt to sell the market short? Right here. It means we get stopped out for a known amount, 2 points. That simple. The next entry is right here to go long at 13.52. The price goes up to 58.75. We say that again. The entry to go long is 13.51. It's 13.51.96, but you got to round it up to the nearest tick where you can actually purchase. So 13.52, and it runs up to a high of 58.75. 6+ points in that move. Okay. Market starts to get a little flat here. Okay, there was a nice move there. Now we come back. Our first valid entry to go short is right there. Okay, on this pullback to 55.78, you got to round it down to 55.75. The swing low is 53.25. So from 55.75 down to 53.25. Okay. The next valid entry to go long. Now I'm pretty sure you've caught on to how simple this is, right? We're not looking at any advanced decline line. We're not calculating a million different things. We're not verifying it against some other market. We're not looking on CNBC to see if they're smiling or frowning. This is based purely on math. All the heavy lifting is done in the background. All you have to do is observe what's happening in front of you on your chart. Okay? And our indicator set will actually tell you that it's time to go long, and it'll tell you at exactly what price. Like right here, it's going to tell you that you need to go long at 13.57. Okay? Over here, 57 is going to be all lit up. You're going to know that, hey, I just need to buy 57. What's the swing high? 13.59. Okay? Small move, 2 points. But 2 points really is not a small move. 2 points is a great move. 2 points, you can earn a very nice living. We have a regular guest on our radio program. He trades 9,000 to 10,000 E-mini contracts per day. That's right, per day. And a good day for him is 2 points. Now you might think, well, gee, if I could afford to trade that many contracts, I would only need 2 points. That's not how he got there. He got there by realizing he only needed to get 2 points a day. Now think about what I just said. He doesn't only need 2 points because he can trade a lot of contracts. The way he got himself into the position to be able to trade a lot of contracts is because he realized early on that he only needed 2 points a day. You need to do some serious thinking about that. Okay? If you're a one contract trader, and you should be in the beginning, well, that's only $100. Okay? But over time, as you become a 10 contract trader, or however many contracts you ultimately trade, you might trade 3, you might trade 5, who knows? That will be determined by you, your patience, your discipline, all of that. But if you're trading 10, a 2-point move is $1,000. $1,000 is $5,000 a week. It's $250,000 a year if you take a couple weeks off for vacation. Now trading is risky and you can lose all of your money. Okay? Futures trading is risky. You must use a stop, and even then you can lose all your money and potentially even more. This is not a solicitation to trade E-mini futures. This is simply to show you what our indicator set looks like, give you a little bit of information about our course, our way of thinking. You should consult with a licensed professional before you make any decision about investing in anything. Okay? That is the official government disclaimer, but it's also from the bottom of my heart. Don't go just diving in because this thing, oh God, this is easy, anybody can do this. Well, back to what I said earlier. If it was easy, then everybody would be doing it, and ultimately there would be no market. I didn't say it was easy. What I said was trading's not easy, but it can be simple. Huge, huge difference. We've managed to walk through one entire day, and it's taken us almost 30 minutes because, well, I talk a lot. I'll show you one last trade from this day. that entry would have been at 1358.50, and the swing low would have been 57. So this trade only had a 1.5 in it, stem to stern. Okay. If you only took a point out of that, well, you took a point out of that. Fair enough. I'm going to end part 1 of the video here at 30 minutes. I realize now that because I went so far back in time to July the 26th, what in the world was I thinking? There's no way I'll be able to get through a month of these trade setups in one video. So we're going to have to call this part 1. I'll give it some fancy name and I'll call it part 1. But remember, we never risk more than 2 points in a trade. So let's just back up to where we started. Right here. Okay. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, 10. There's actually 10 trades. You can see down here this is midnight of the 26th. I'm not sure what time we started on the 26th. Let me go back and find that. Oh, we actually started on the 25th, didn't we? And that's okay. That doesn't change anything. Okay, the first trade we marked up was on the 25th at 17:19. So if you weren't in the military, that's 5:19 in the afternoon, Chicago time. But remember, these are global markets. They trade 6 days a week. So on the one day that we've recapped, we had 10 trades that moved in our favor, that allowed you the opportunity to take some profit, and we had 1 trade that got stopped out. Now it would look like and seem like and sound like that I went back and found the picture perfect day. If I were you, I would certainly think that, because the day that I rolled back to and picked at random showed 10, we'll call them yes trades, and we had 1 trade stopped out. Past performance is no guarantee of future results. Now, is that an unusual ratio there? 10 to 1? Yeah. I got lucky. I scrolled back to a day that was better than normal, better than average, whatever label you want to give it. But that's okay. I'm going to walk through the entire last month. So you'll see days where it'll flip-flop the other way, perhaps. Some days where there's a break-even number of trades, or whatever it unfolds. Because I haven't done this ahead of time, I'm doing this live in real time. I'm just realizing that I can't do it all in one sitting and all in one video, because the file will be too huge to upload, and I need to have a life. So we got 1 in the can, and we'll make a little note here that we're going to pick up in the next video, July 27th. In fact, that might be a great way to do it. I'll make a series of videos. I started on the 25th/26th, and then I'll just do the 27th, and depending upon how quickly I move through each day, maybe I'll put a couple 3 days per video. Alright, and this is again just to show you one of the simple methods that we have for trading E-mini futures, that you don't have to overthink it, you don't have to learn too many things. The most important things you have to learn is patience and discipline, and those are things we can't give you. We can hand you charts, and we can hand you data, and we can hand you indicators. What we can't hand you is patience. What we can't hand you is discipline. What we can't hand you is self-control. Those are things that you have to bring to the table. No vendor can give you those things. All right, I'm going to wrap it. Thanks for tuning in. We'll be back with video number 2 in the very near future. To take the free trial, once again, go to you've already invested 30 minutes, 35 minutes. You might as well take the free trial, right? There's the address, cfrn.net/apply. No credit card required. We don't need to know your mother's maiden name, the street you grew up on, your favorite pet, any of the stuff that is not, give us a legitimate name, a legitimate email address. We're good to go. Fair enough? All right. Hopefully I'll see you in the live trading room. Have a good evening.